Look, we know it, and you know it. Tax residency can be quite the iceberg for many digital nomads. What with the different tests to qualify for tax exceptions, various treaty agreements and a myriad of other ties one has to maintain just to call oneself resident in the eyes of the tax collectors, it can all be very overwhelming. However, before we dive on into the more precarious parts of the discussion, let's just divert our attention to how exactly the U.S. taxes its citizens on worldwide income. The U.S., unlike some other countries, is not solely concerned with your income garnered from in-country. They tax its citizens on the wealth they amass from all corners of the world, regardless of where they're physically positioned. This means that even if you find yourself seaside on a cotton candy sand beach somewhere in Indonesia or in the heart of bustling Barcelona, working away at your computer, the eagle-eyed taxman back in the USA knows what you're earning. It's a new aspect of the expression, hits home, doesn't it? That said, there are ways to reduce this tax burden. One of the most popular ways is by qualifying for the Foreign Earned Income Exclusion, FEIE. As it sounds, excluding a certain amount of your earnings garnered in foreign lands from being taxed locally. Of course, qualifying for this exemption isn't as simply as showing up your passport and a few screenshots of your dreamy away-at-work life. Oh, how we wish. The IRS needs you qualify through one of two tests, the bona fide residence test or the physical presence test. The bona fide residence test requires you to have been a resident of a foreign country for an uninterrupted period that includes an entire tax year. Uninterrupted, in the eyes of the IRS, includes even the most trivial disturbances. The moment you decided to pop stateside to see family, for example. On the other hand, the physical presence test demands that you need to have been physically present in a foreign country for at least 330 full days in 12 months. Thus, metaphorically, no matter how many tax shapes you're attempting to flatten, it's keeping an eye on that shifting calendar that's going to count. If you pass the fiscal fitness test and manage to qualify, then the reward is great indeed. The U.S. shall not tax you on your first $130,000 earned in a tax year, and if you follow all the steps correctly, it is a great way of cutting your tax bill substantially. But before the digital nomads of the world begin to celebrate, there's always a small catch. Even if you are not liable to pay regular U.S. income tax on the earnings you exclude under the Foreign Earned Income Exclusion, you still may be liable to pay self-employment tax on those earnings. Because self-employment income is subject to Social Security and Medicare taxes, just like income received by employees. The rate here continues to be the standard 12.4% on the first $137,700 for Social Security and 2.9% for Medicare, regardless of how much you paid in taxes in your country of residence. However, countries have established totalization agreements with the United States to alleviate this double taxation. This means that even though you must pay due diligence to the U.S., the amount you pay will take into account the Social Security contributions you made in any totalization agreement country, hence again reducing your tax burden. Therefore, always check to see if your country of residence has a Social Security totalization agreement with the U.S. But the difficulty doesn't just end with federal taxes. If you hold ties to a state, that state might expect is cut too. Owning property, having a driver's license are enough to qualify you as a resident for tax purposes. Not all states demand income tax, but most do, and it's vital you keep pace with your state's tax laws also because the rules can vary widely from one state to another. That is why it's also important for you to understand the concept of tax domicile. Domicile refers to the state to which an individual intends to return after temporary absences. It's important because most states automatically consider a person to be a resident of that state for that state's tax purposes if that person is domiciled there. Consequently, if you plan to change locations often and want to avoid state income tax, you should not make any exhibition of your intent to reside permanently, i.e., applying for or obtaining a driver's license or voter registration, renting a safe deposit box, etc. Now, a common and comforting piece of advice for every overwhelming financial matter is to seek guidance from a professional. However, another matter which often is said hand in hand with tax laws, the advice not only holds but becomes even more crucial. Because while qualifying for these exclusions and some of these double taxation agreements may seem easy enough in theory, complications have the habit of sneaking in, especially when they involve changes in the applicable legal tax principles or bilateral agreements. This is where your tax professional would come into the picture, guiding you through this sea full of sharks with the finesse of a dolphin teaching its younger about a commotion of a feeding frenzy. They can help you confirm the steps you need to take to be eligible, and in case fate goes south, they could also help prepare you for any future situation that might arise. Tax law is like a language of its own, filled with plenty of complex terms and phrases that would probably be smoother to pronounce than it is to handle. You may be able to keep at the head of the suit with a skilled tax professional to act as your personal interpreter. The confusion persists when it comes to tax treaties between the US and other countries. These treaties often work to help prevent double taxation by determining which country gets the right to tax certain types of income from each contracting country. For a US general audience, it can be enough to know that these treaties are designed to prevent any instance of double taxation, but for the citizens of these lands, each comma in these treaties has the potential to play a huge role in their lives. However, while it's great to be enlightened about the possibilities and the pitfalls of the landscape called tax residency, it's always good to remember that these myths and their remedies were designed for a purpose that was perhaps not dissimilar to yours. Thousands of people have been living and will continue to live with these myths around them. They aren't dark forest paths full of lurking dangers, they are guides, leading to clearer spots and promising answers. Whether they work or not, though, rests entirely upon the traveler and their precise footing. And so, while the knowledge of these myths and the truths that it unlocks may not always sail you through every fiscal tide, they might just help you plot the course to safety that much easier. It all boils down to being informed and then making a conscious and categorically correct choice. And if you find yourself floundering in this sea of taxation, remember, there are always professionals who can help navigate. Knowledge, they say, is power. And according to us, power in all its avatars is known to bend or break when it comes in contact with ignorance or fear. So do not let the myths that abound about tax residency guidelines scare you into making hasty decisions. Stay informed, continuously update the changing rules of the game, be it through personal research or professional advice, and most importantly, stay ready to wade through the tides, heading ever towards that serene fiscal shore. And it doesn't end here. Alongside managing your taxes and tax residency, it's also important to keep track of your financial records, to plan for retirement, manage your health insurance, and the list just goes on. In the digital space we're all defining, our financial lives unfold just as nomadic as our physical selves. It's important to plan, to keep records and to stay informed. The need to be financially savvy and tax smart is crucial. After all, the world is your oyster, and in your quest to realize your dreams, you wouldn't want this tiny pearl to be the boulder blocking your way. And so, the another myth about tax residency bust is complete. We hope this journey through the ever-changing landscape of tax legalities has been enlightening and that it is a stepping stone into the world of financial literacy for the digital nomads of today. Stay in tune with the latest updates, do your research, and above all, seek out professional help. With the right attitude, these financial matters can be navigated with ease and you can get back focused on what truly matters: growing your business and exploring the world. We delve deeper into the nuances of understanding tax residency for nomads. We explore the world outdoors of varying legal systems and policies, breathe life into by fresh perspectives. In doing so, we hope to continue shedding light on the complex subject of tax law around the globe. Remember Bertrand Russell's immortal words: the fundamental cause of the trouble is that in the modern world, the stupid are cocksure while the intelligent are full of doubt. And so, it might be for the best if you refrain from taking the advice merely from the first financial blog you chance upon. Simply titled "How I Slashed My Tax Burden by 50%. Bertrand Russell, renowned philosopher, and Nobel laureate Sheldon Lee Cooper from The Big Bang Theory says, knowledge is the most reliable form of power. And we want you, the digital nomads of today, to be powerful in your financial undertakings. With financial clarity, comes peace of mind and the ability to focus on your work and your journey. So, it's time to delve into the world of tax residency with all its complex contours. We wish you all the best as you set about defining your own fiscal homelands. The fiscal tale involving residence and place of business location, multi-country operations, and travel is intrinsically tricky and multidimensional. Tax planning, in such a setting, requires astute judgment and an understanding of the origin and effect of legislation and treaties prevalent in all such jurisdictions. We hope you found these myth-busting insights helpful. Information, after all, can make all the difference in the world. Especially in a world increasingly controlled and defined by its wealth and assets, both physical and intangible.